Very good afternoon, delegates. Welcome back to the post-lunch session on case studies on reverse charge mechanism, place of supply and valuation. We have with us CA Ganesh Prabhu sir. May I now request SARC Secretary A.V. Arun sir to escort Ganesh Prabhu sir to the dais, please. Ganesh Prabhu Balakumar is a Chennai-based chartered accountant in practice. As a partner in CRBS and Associates LLC, he specializes in GST and indirect taxes for more than a decade and heading the compliance, advisory and litigation practice. As a counsel, he has represented clients in various cases before Customs, Excise, Service Tax Appellate Tribunal, Sales Tax Appellate Tribunal, Commissioners and other adjudicating authorities of GST, Customs and indirect taxes. He advises various organizations and advises clients across verticals such as manufacturing, construction, transportation, entertainment, real estate, retail trade, automobile, educational institutions, charitable and religious institutions, hospitality industry, EPC contracts, information technology, business consulting, etc. He is a regular faculty and has extensively toured to several parts of India to give guest lectures to members, finance professionals and students on GST. He has presented papers in GST and indirect taxation on various branches of ICA and other institutions as well. He is a resource person in ICT Academy, an initiative of Government of India and other states. As a member of GST study group of ICA, he has contributed to the development of background material on GST law, handbook on annual return and technical guide on GST audit developed by GST and Indirect Taxes Committee of ICAI. Member of a governing council, and he was the immediate president of International Chamber of GST Professionals, an association dedicated exclusively on GST and indirect taxes. He regularly writes articles in reputed financial dailies and magazines and has participated in various shows and debates in television. During his school days, he has won first place in All India 5th quiz competition for ICA students conducted by ICA. With this brief, I have great pleasure in presenting before you CA Ganesh Prabhu sir to take us through case studies on RCM, place of supply and valuation. May now request CA A.V. Arun sir along with our regional council member Satishan sir to present him with a shawl and memento. Over to Ganesh Prabhu Balakumar sir.
Good afternoon. In that break, one slide is displayed in that screen. It shows the 4 activities already informed in the earlier meetings. So kindly I request the members to go to our SARC website, use that member services, whatever the items displayed in that. If there is any improvement required, kindly let us know, so we will improve it. Thank you.
A very warm welcome to all the delegates for this particular seminar and case studies on GST. When this particular topic assigned to me, more precisely on RCM, place of supply and valuation, and it was very precisely told to us it has to be on a case study model. We don't want on a one-way discussion model. Already people have enough issues in their hands in connection with all this topic. So we want you to cover all this. Keeping that as the agenda in my hand, we have prepared a set of case studies associated in this. Not much, just 3 case studies. 1 on RCM, 2 on place of supply, 3 on valuation. And all will have some small 5-6 questions. Now, in fact, my earlier speaker was just taking inputs from him. Now, would you be able to complete your case studies, what you had in your hand? Because last night we discussed what he is going to do. And he said, no, I could be able to completely handle everything. Keeping that as in my mind, because when this topic is given to me, I personally felt a 3-year kid which is dropped on a chocolate shop, what sort of excitement you will have. And this should come, this should come, this should come, this should come. Now then I decided you have to stop at one point in time, because taking up one segment, I had so much to write and I had to curtail myself. Oh, this we will not take, this we will not take, this might be knowing when we discuss this is the flip model of the other, all that. Keeping that in mind, the case studies are being presented. To start with, Vishal, can you help me on that? To start with, the names are all little copyrighted names. Okay, the company names are all is copyrighted by us, so you cannot put a company and all in that way. The name of the company is Non-Payment of RCM Private Limited. So that itself will know. Okay, why the company name is designed like it. Non-Payment of RCM Private Limited was being audited by the state government under section 65 of the CGST Act for a particular financial year 22-23. Following are the audit observations made by the audit officer, where they have simply told there is a proposed demand of 32.5 lakhs in connection with GST payments. And on perusal of this demand notice, we could able to observe some 8 line 9 items they have selected for the purpose of quantification of this demand. What are those 8 line 10 items to start with? On perusal of the profit and loss account, all that I am determining here is how this 32.5 lakhs, how this 32.5 lakhs is being came. There are about 7-8 expenses which are all selected. Hope I am audible. Yes? I'll brief it. This is what is there in the case study. To start with, transportation charges is the first entry. So in P&L there is transportation charges of a particular amount. On the entire particular amount he has charged GST at 5%. Post transportation charges there is something called as security charges. On the security charges it is levied. Then there is something called as rent. On the entire rent 18% is levied. Followed by post rent,
brand promotion expenses.
Brand promotion expenses. Now brand promotion, so any guess what entry will be there? He linked with sponsorship and told on the entire brand you have to pay what? 18% GST, so on and so forth. He not left the rates and taxes, royalty and license fee, but not the least, your hiring of motor vehicle. All these expenses were all selected. And after selecting all this, already in P&L all the amounts are there. They have simply selected everything, but for transportation, the only blessing in disgrace is this what? See, technically if he should have selected transportation also and collected what? 18% GST. Somehow something clicked his mind. For transportation alone 5% he charged, rest all flat 18% was charged. So this is how the case study will end at this level. Now, after which the respective accountant of the company will provide breakup for all these expenses. Now that is where the whole game for us would begin. And from there, because it's a practice, don't ask me why and all. I'm sure all of us have seen enough barrage of notices. At times it is templated, at times somebody else, individual notice and all is sent to us. With due respect, the worst case that has happened to me is one fellow's death certificate was attached as a show cause notice attached. See, honestly, if you ask me, 1718 DRC 1 and 1920 of the same assessee added, I can accept it. Okay, we also make mistakes. It doesn't mean I never made mistakes. There are cases very recently for a 1718 reply. I had 17, 18, 18, 19, 19, 20. See, you can't alone give template of notices. I will also have template of replies. And I being a very die-hard fan of Harris Jairaj, you cannot expect me new songs and all. Same song, that's all. One song we have to convert into 10. Now how we have to convert? We have to convert in a particular model. Now coming back here on my core point of discussion. At times, all these technical challenges are all there. I am now not on any of the technical grounds of show cause notice. Section number not there, section number is not missed, prejudging and show cause notice. You are hereby declared to pay. I still cannot accept a phraseology. To me, I do agree. I am at civil law, I don't practice criminal law. For me, FIR and SCN is no different. FIR, SCN is no different, but for the law which adjudicates it is going to be different. But what sort of information FIR has, vis-a-vis it is going to be show cause notice.
Or as simple as what is the charge sheet there has. Here show cause notice is same. At times section number is not there, this is not there, year is wrong, attachment is wrong, how he quantified is God only knows. At times whether God knows, see these are all common challenges across notices. In fact, we now created one template where first 10 questions will be there. Who is the authority issuing notice? Whether that authority has the right to issue notice. Many times we are on the last page of the answer and somebody asks us fundamentally, hey, that is a audit notice, yeah, issued under section 65, issued by state authority. Where the assessee's jurisdiction itself is what? Center authorities. These are all technical grounds. I am not on any of the technical grounds. Let's park for a minute. Date, eligibility, power, 73 or 74, applicability of 73 or 74, issuance of notice, whether that notice is issued within time. Under section 65, he has to complete my audit within 3 months. Whether he has completed or not, questioning the validity under section 65, questioning the notification extension under 168 on. All this are all technical grounds. When I don't have a proper reply on merit, I will take all these grounds. Okay, very simple. When we have been started to argue, we have been all told is only one thing. If you have a good case on merit, then argue on merit. If you have a good case on law side, argue on law side. If you don't have both, confuse the judge. That's all. At times you have to be in this way. Now keeping all this in mind, I am not touching up any of my technical grounds associated with it. I am going to be only on factual points on RCM, factual points on place of supply, and factual points on valuation. Nothing I am going to touch in connection with legality. Coming back here, for the purpose of transportation charges, the moment when slides is on, we will be able to be visibly know this. On transportation charges, there is a quantum of amount. Vishal, can you help me? How much?
3.5 crores.
3.5 crores is the total sum. Now this transportation charges has some breakup where the accountant of the company, the accountant of the company comes out and make a disclaimer that or a discussion saying that of this transportation charges, we have received certain invoices from our suppliers. The suppliers, apart from the value of the goods, also collect freight. And when he collects freight, including the freight, he pays GST. And we are accounting that freight as a transportation charge, or that transportation charges includes those freight also. As simple as that. Freight charges which are charged in the purchase invoice amounts to rupees 1.5 crores. On our total sum of 3.5 crores, 1.5 crores is a direct hit, which is as simple as already it is charged to what? GST. On a little high-end answer, am I paying it to a supplier of goods, or am I paying it to a GDA? It's a question that needs to be answered if somebody is not convinced on the first level. First level we can get convinced. If it is not convinced, then the next supplementary question immediately we have to ask, it is GTA, and I'm sure all of us in this room will agree the term GTA is already defined under 11/2017 notification, a person who transport goods and issues consignment. The phraseology and here plays a very significant role. So first of the 3.5 crores, 1.5 crores, am I liable to pay GST under RCM or not required? Not required. Let's forget for a minute. Second, these are all explanation given for that 3.5 crores. Freight charges on which taxes paid under FCM by the supplier of a GTA service amounts to 1 crore. With due respect, I don't think so any P&L will have transport charges hyphen GTA, Chan post charges hyphen non-GTA, transport charges hyphen exempted, transport charges hyphen less than 750. Maybe I might have a subledger at the accounting level, that to whom, provided that CFO knows GST, with due respect. Oh, I am very clear.
I'm not finding fault with somebody. See, this is something, a data which is required, and the data control, they want to have it from the books. There are two ways of controlling GST, I understand. One is taking a complete control of GST working through a Excel sheet or dashboard or all those models with some of the organization who are very conversant with various ERPs across, they want to take control over there. Some of the people who are all following traditional practice of accounting, still they rely on the most popular accounting package as Tally as their bread and butter for their accounting. For them there is no restriction at all. All they require is one Alt-C, that's all. Alt-C, I'll get a ledger. It is not as difficult as in that I need to create in SAP or Oracle, I have to go get permission, I have to have accounting code, I have to communicate to all the fellows across, which is little tough. Here, as simple as that, one Alt-C will solve the problem. Now coming back to our core discussion. Transportation charges already charged under FCM, again that is also going to be brushed aside. Last two segments which are all given to us. Freight charges paid to supplier of transportation goods who has not issued consignment note. This is a little technical question. Don't ask me how and all. This is the breakup that is given by the accountant. Accountant says, I have made a payment to somebody who has not given me consignment. Some of our friends who are all hail their practice from this part of Chennai, North Madras, will agree to me. Till today, there is a good amount of transportation happens in manual rickshaw, cycle rickshaw and bullock cart. Not some ordinary product and all, preferably MS steel, or it is going to be some of the plates, patas of the particular Kambuchetti street, or for that matter any street. We still come across a situation. Now, keeping that in mind, all that I now want to endorse before a view is very simple view on this. RCM applicable, not applicable.
Not applicable.
Now, if we say not applicable, what are the documents that are we going to have to appreciate this modality? It is Tata Magic they transported, or I'm just picking up that vehicle because the fluency of it, we use it just to take up or capture that interest. That is a small time vendor, so he does not issue consignment note. Here, I would want all of us to appreciate some of the newer legislations under the Motor Vehicle Act. And very interesting to note, there is something called as Carriage of Goods by Road Act 2007. On a particular case of GTA, when we referred, a beautiful, it is a law that is there in place. How far it has been complied, we can question it very easily. Everybody in the chain of transportation is called as common carriers. And all the common carriers are mandated to issue a document which is equal to, you call it as consignment note, delivery note, lorry receipt, or any of the terminologies. There it is going to be just a proper noun, that's all. But these are all mandated. Now coming back here, ounce on the assessee is going to be high in terms of proving this 40 lakhs. Now it is a payment that I made to bullock cart. As long as it is transportable and that facility is there and it is being taken, I don't mind in connection with excluding that from RCM. Or I pay to some vendor who has not issued me consignment note. But how are we going to prove? And let me also remind you rule 54 sub rule 3, which says in case of a GTA, he no need to issue a consignment note. His invoice would be treated at par with consignment. These are all your downside or flip side in arguing, I don't have a consignment note, so I will not pay what? RCS. Can we able to appreciate this proposal? Forget if it is going to be bullock cart, this, that, cycle rickshaw, manual rickshaw, where we have an exemption in connection with the transportation of goods by road other than GTA. Entry number 18 to notification 12/2017, that will take care of it. But the core point here is, no, it is transported through
a contract carriage, or sorry, not contract carriage, the goods carriage, having transported through a goods carriage, again it is motor vehicle goods carriage, if they don't issue a consignment note, can we place that as an argument before? Is a point that need to be tested highly. From assessee's perspective, he has to endorse a lot of evidences in connection with that. Quickly getting into one of the next exemption which discuss about freight charges paid to suppliers which are less than 1,500 rupees. I am sure everybody in this room are already aware. They said exemption, 1,500 rupees exemption, which came long ago, so long ago in 2006. In 2006, 1,500 rupees, I still remember, goods will be transported from minimum from Chennai to Chengalpattu. Now, Krompet to Chepak also, he will ask more than this. Just a span of 15 to 18 kilometers, he will ask more than this. And nobody is going to transfer. In case if you have somebody where it is really used, yes, till July 22, the said exemption was available. After that, the said exemption is also deleted. Proposal of this exemption, prior to that, yes, it is valid. Post that, it will not be valid. That aspects need to be taken care. And concluding here, I think, Vishal, can you go back to the name of the company? Now, why name of the company is important is that's all. Which means what?
He has not paid RCM.
Not at all paid RCM. RCM means he'll ask, RCM, what is that? And it is not an ordinary company. A company which does some good turnover of some 350 crores only. Not very great turnover. 350 crores only. But if you go and ask him RCM, he'll ask, what is this? Okay. So, non-payment of RCM company. There is a turnover from this 3.5 crores. If you reduce 1.5 crores, 1 crore, 40 lakhs and 25 lakhs. Assume for all this we submit records. And all this gets excluded, we might be landing on a number. On this number, no doubt what is going to be applicable? RCM is applicable and not on the entire 3.5 crores. Can we have any arguments to take up? This amount is not paid. 22, 23, they said amount is not paid, or for that matter, it is going to be some other old years RCM also. Let's take up for a minute, it is 18, 19 or 19, 20, 20, 21. There are two propositions before us. One, pay this RCM along with interest and claim credit. A proposition, I am not saying it is non-advocatable, beautifully advocatable. And can I take ITC now? I don't find any difficulty in this, except for somebody very closely read section 31, subsection 1F, which discuss about a self-tax invoice along with 31.1. When somebody very carefully read this, issuance of an invoice is a procedural issue. Let me repeat it. If you want, go back, use section 122. Levy me a penalty of 10,000 rupees or go to 125. Why 10,000? Levy me a penalty of what? 50,000 rupees. But don't deny my credit of larger amount. One proposition. Now, next proposition. Does 16.4 usage of the word invoice includes self-invoice also? Can we be able to appreciate this discussion? Usage of the phraseology in 16.4, invoice and debit notes, whether that invoice includes self-invoice also. Some of the arguing counsels of the apex court and high courts are not ready to buy this proposition when it comes to invoice. In fact, they go to a next extreme of any type of invoice. Tax invoice, invoice cum bill of supply, self-tax invoice, all are invoices. This is, see, let me repeat it. I am just giving you your flip of taking up arguments for non-payment. Followed by the last is one of the well-recognized principle. Somehow I embrace this principle in a very great way, which is concept of revenue neutrality.
I'm sure all of us will appreciate that if I would have paid this RCM at that time and I would have taken credit, I would have adjusted with my output tax liability. Of this three core principle, the earlier speaker who spoke before me will buy a point of pay along with interest and claim credit now. We will dispute it later. I go to a little old principle of saying, you only lay down British Airways, you only lay down Jet Airways. If it is foreign company means you will say concept of revenue neutrality is applicable when that fellow comes with forex. If I am going to claim being a domestic company in India, no, concept of revenue neutrality and all is not there. If that is there, I would have invoked. See, this doctrine has its own challenge, I am not saying. But the point that I want to advocate over here is very simple. We still have a grey area. Pay, claim credit definitely will have dispute, or revenue neutrality will also have dispute. Now we are going to be little wise. Are we going to fight today or are we going to fight 5 years later? That's all. But fight is going to be there. Maybe as a point of caution note, a model can be proposed where we pay under protest and fight it out with matter. Because at least when we pay under protest, the matter, the interest will come into rest. Otherwise, the interest meter is running. We are neither bothered about penalty nor bothered about tax because both will stop. The only fellow's meter which will not stop is interest. Many times today's positions are taken because the interest meter runs very quickly. These are all my broader thoughts in connection with transportation charges which are being there. Apart from this, there are many times various other issues crops up, but by and large, this is the position associated with it. Quickly coming back to a next charge called as service charge, security charges. If you go back little earlier, the total security charges paid by the company is about 15 lakhs, and the breakup for this 15 lakhs security charges comes. There are 3 locations that are there to the company. Don't ask me why and all. For all 3 locations, they have engaged 3 different fellows. If they would have engaged one fellow, life would have been simple. Nowhere, no. Then all of us, how we will have work? So they engaged 3 different professionals. And best part was, the first company who takes care of location A is Shaktiman Securities Private Limited. And the Shaktiman Securities Private Limited was paid 9 lakh rupees. And the second fellow was I Protect Security and Co. A partnership firm, where to him 3 lakh rupees was paid. Somehow for the first quarter, he has paid tax, which amounts to 1 lakh rupees under forward charge. I am sure some of us would be facing this issue. We have made a payment to a security fellow, and that security fellow has issued us a forward charge invoice in spite of he is actually covered under what? Reverse charge. And the last case is security charges paid to upcoming security company by name called as Secure Tight and Co. LLP, and to him 3 lakh rupees was paid with a very precise rider that he told, sir, I have not crossed the threshold at all. Let me first cross threshold, then let me decide upon GST. Now you don't ask me anything. Now these are the levels at which it is there. Now at this juncture, all that I want to appreciate here is, one more file will be there, relevant provisions, statutory provisions. Is there? Not there, in the pen drive that I have here. Now if we carefully read the security entry, the security entry uses a very precise phraseology. I am sure all those services provided by a person other than body corporate. Now, no doubt all of us will be agreeing to, we are at times ready to buy the proposition, what you call advertisement, you call sponsorship, end of the day has the transaction is being charged. Yes, we will close it at that level, was the proposition over there.
Sir?
Yes, sir.
Of late, one of our clients is getting
brand promotion charges by one of the MIC, what they have structured is any amount, whatever they have spent for the brand promotion, they get it done to another third party. That person will end of the month will
Issue a bill.
issue a bill. So how do we look at it?
Now, sir, the contract or the model that you are proposing, I am agreeing to a proposal called as, it is more of an organization whose main business is promoting brands. Now here once I promote brands, the organization that you are referring, who is paying, he will be calling in his P&L one of the line item as brand promotion expenses. By seeing that, only the trigger for sponsorship will come, because no organization has the habit of marking a line item called as sponsorship, including the best of the organization who endorse IPL. In fact, I did that study also, downloaded all these fellows' P&L and did the basic research. None of them called sponsorship fee. Nowhere in the notes they have the recommendation, because the agreement is worded like that, because you pay a entire lump sum license fee which will be spread for a period of 5 years, and then periodically year on year one amount. So coming back here, this particular expense of that organization, that is more to do with product promotion. Yes, business promotion. Sir, business promotion, sir, I would do only this difference, sir. There is a difference between LG advertisement and Samsung advertising its product. I'm not very sure, are we very minutely watching it or not? In fact, for transfer pricing, this used to be the always example that is given by predominant of the people who discuss about it. There's a difference between LG's advertisement, an organization by name called as LG, who advertises products. LG will advertise its brand, Samsung will advertise its product. Am I pushing a particular product? Am I pushing a brand? That's all. It's more of something to do with brand. I would equate it with business promotion. If something in connection with that particular product, a new product that I'm going to launch, then I'll refine my discussion only to product promotion. Both business promotion, product promotions, we can have sponsorship. Sponsorship can be in any way, but if the model that you have been advocating, or the model that you have been recommending, I have no challenge at all. Straight away, the respective service provider can bill, other party can claim credit. The service provider on his inputs, whatever expenses he make, if there is GST, you will be entitled to claim credit. Quickly getting into some of the interesting times that is ahead in our life, which is going to be on these 2-3 expenses. Rates and taxes. This one ledger, be it income tax also, they scrutinize as if something very big inside. Nothing. GST interest, last year assessments, tax paid, not income tax. Last year assessments, VAT tax paid, this, that, which cannot be form part of it, will form part of rates and taxes. For some of the organizations, a practice, preferably who run factory, who run various licenses that are required, all these people also source those licenses over there. If you scrutinize this particular organizations, the accountant of the company gives a breakup that payment for factory license fee under the Factories Act, 75,000 rupees is paid, and for sourcing pollution control board license, 1,25,000 rupees is paid. The question before us is, definitely the other party has not given what? GST invoice. Are they liable to pay GST? Factory license and all, why should I pay? Correct. Services provided by government to business entity. Thank God, they have issued notice for paying to MCA and all. MCA, there's one fee, additional fee, all this are all paid. For some of those for some of the organization, they are paid. Very interesting to note, money paid to MCA for incorporating the company alone is exempted. When we very carefully read, incorporating the company is getting exempted. Now, all those periodical MGT 7, MGT 9, various other forms we have, because every month after April you have to file one form.
See, the law became so dynamic. Suddenly one day they told, I don't know for what purpose that form is used. They told it, you have to file one called as Form BIN, B-I-N. See, that BIN, B-I-N. I only remember that Ben 10 fellow. Okay. See, what BIN form has to be filed. In any case, see, everybody's professional opportunity should be taken. I am not denying it. But the problem is, see, often compliance becoming a very big task. Now, if we carefully read this entry, services supplied by central government, state government, union territory or local authority to a business entity. It is not something to do with rent, it is not something to do with transportation of goods, transportation of passengers, all that stuff, or it is not going to be with any other activity of regular other than business. It's all out and out for a business organization. Now, pollution control board fee and factories act. On a very strict reading, both will not be brought into the net of GST. Let me repeat. But only thing is, it is a very tough game to fight. And two, the amount is being very small. Of late people feel, do this to prepare a reply, file a reply, upload it, on that I pay 10% and then wait for justice and all. Better let me pay this time, not even claim credit, next year onwards, let me pay, take credit. No, you cannot say this is not used in the course of furtherance of business, no. This is the way at times people close, but honestly, I have different view because of a reason. Be it the administration of the pollution control board is not coming out and getting fitted in the terminology called as central government, state government, union territory or local authority. This is the point. If you ask me technically where I can reply, this is the point. But again, in local authority, something what local authority is going to do, and if it is done, both services provided by that body or services provided to that body becomes exempt. So those are the interpretative points. But to explain all this, asking that fellow to read section 2 subsection 96 and then explaining him, boss, this is first of all not among this four, under local authority definition also it comes under the last limb. If you go and read under last limb, there is a difference between government authority and government entity. I will come under government authority, and after proving government authority, I will go to entry number 4 of notification. That fellow will say, sir, small amounts, sir, you pay, sir, I cannot have nil para, sir. My commissioner will scold at me. We will also say, okay, go. That is okay, go for something else. If some of our client who is going to come up with a multi-car parking on Panangal Park or some of those any other places which are going to be proposed, and they pay a consolidated large sum, let's say some few crores, 2 crore rupee, 3 crore rupee to get that license to put up that multi-level car parking position, on that day, please appreciate whatever arguments I have impressed upon before you, all these arguments are viable arguments. Only thing is, for 18,000 rupees, let's not also fight that. Okay, it's okay, understandable. But when it comes to 18 lakhs, at which point I will often impress upon every time. From 1/7/2017 to 1/2/2019, there are two views. For a motor vehicle, you can take credit. For a motor vehicle, you are not supposed to take credit. Now, during this period, after 1/7/2019, forget it, not at all possible. But between this period, two views are there. Often I impress upon, if it is Maruti, please don't take credit. Mercedes-Benz, take credit, worth to fight. See, to fight also, your number should be at least little attractive, minimum 10 lakh rupees. See, I'm not in what 10 lakhs excites more. No, nothing, because after it we started to see some 3 crores demand, 5 crores demand, 10 crores demand, 50, 60 and all. On the other day I was been highlighting, on my first 8 years of my career, the highest demand I saw was 60 rupees. In GST, 3 weeks before I saw one demand notice, 1,147 crores only. tax alone, minded tax alone, and it is a notice issued for 1718. One more time, 1,147 crores and 115 crores of penalty. I was surprised. How this demand was taken? 6-page order. Within 6-page, 1,147 crores was demanded. What is that operating paragraph? What is the cause of action for it? The cause of action at all is huge word. What is the cause of action for it? On perusal of your trial balance. In the output GST ledger, credit side, 1,147 crores is there, or larger number is there, against which what you paid in 3B is only 168 crores. My boy, that is SAP. 17 states entry will come and fall in this account. This is the control account, and from here on a single digitalized banking payment, everything is getting discharged. So naturally, this account will have what? Not 1,147 crores. It will have more than that number. If I say that particular authority, order ಕೊಟ್ಟಾಚೆ sir. ಕೇಕಲ್ಲ ರೆಡಿಯಾಚೆ sir. Highest demand in my jurisdiction. Rectification order, yeah. Madras High Court. Okay. So, point that I want to see, sometimes we don't know. Because everybody is curious. All of us are curious. How much? Because for 15 lakhs, 20 lakhs and all, sometimes we get 26-page notice, 30-page notice, thanks to somehow DGG and all. 564-page notice for what? Along with, of course, RUD, relied upon documents, starting from 1 to 26. 26 relied upon document, the core notice operating for 46 page. What is the demand? 68 lakhs. It will take its own time. Somebody has to mark and somebody has to impress upon this is there, this is not that, this is paid, this is not paid, dates and events. It comes up. So coming back here, core principle, let me repeat, I just appreciated before you the principle of factory license fee and the pollution control board payments in connection with it. Somebody often easily fades us, no, it's a fee that you pay. See, I am not questioning fee is a consideration, fee is a service or not. I am not on that line at all. That is an easily fadeable argument. I am not on a principle. The principle here is, are you a local authority? If you say yes, then there is an exemption. Please explore that exemption. That's all. Coming back here, moving forward on the next one, a very famous dispute which is very recently going on, thanks to the Chennai Tribunal on ONGC, very, very precisely laid down very clearly now that the license, more precisely, the royalty that is paid on the quarry licenses, various licenses, all this is not leviable to GST. Now, we have the Madras High Court very recently has stayed certain proceedings in connection with this, because majority of the quarry license holders or all these licensed people are all receiving notices. None of this is payable. It has been pressed for quite some time, as the matter is already pending before the Apex Court. We are waiting for the decision of it. Once that comes, all this will get settled. But prima facie now, at a service tax level, there are certain very clear thought from the tribunals. But I am of a view, the same principle will hold good even at the next higher forums, because as a principle, it is appreciable. Professional charges often are looked on that. Advocate fee, yes, RCM is applicable. I am not here on any of those grounds. I am not going to say RCM is not applicable on advocate. Don't expect any answers on that count at all, nothing. Now the challenge here is, many times when we engage an advocate, there are certain expenses that we need to incur along with the representation. Let's say we have to engage an advocate who has to go all the way to Madurai High Court and appear before the Madurai High Court. He issues us a professional fee invoice along with a out-of-pocket expense, which is predominantly for travel cum stay. Now the question before us is, RCM is applicable on what? Professional fee alone or including the charges?
I mean, including the out-of-pocket expenses. Because many times, a lot of us are very clear. Professional fee, yes, RCM is applicable. No second thought about it. So I'm not going to impress anything there. But the point that I want to highlight here is, when it comes to expenses, at times there are expenses which are incurred for printing and filing. At times there are expenses incurred in connection with, and see, let's forget, sometimes who are all very good in accounting, they may put all those expenses under different head. But many times it is payment, this payment, advocate, done. Yes, in professional fee it gets stuck. And after it gets stuck, we cannot do anything. It has been filed, it has been went, it missed the rise. Let's forget for a minute. It is one such mistake that has happened here. Now, our submission is it only on 2.5 lakhs RCM is applicable or 2.75 lakhs RCM is applicable? It is on 2.75 lakhs. It's a bitter fact, we have to agree to it. Section 15 subsection 2. More precisely, clause B and C on that clause B. For this particularly clause B, but B and C are the core points for all this sort of additions. Now RCM also section 15 applicable. Section 15 is a value of supply. Be it FCM, be it RCM, for everything section 15 will be applicable. So even including on this, RCM is going to be applicable. On the last entry, in connection with renting and hiring of motor vehicle, in this particular facts, there is a quite substantial amount that will be paid, approximately some 16 lakh and odd would have been paid by the organization, where 12 lakh rupees is paid for taking a motor vehicle on, I would call it as this operating lease. Okay. Now what is this magical word operating lease? All the people who bought in India during 2014 to 20, all those luxury car has unanimously came to a conclusion that we should not henceforth buy luxury cars. I am not joking. It is something like becoming of late very difficult to maintain the elephant. So all that I need is only what? A car which is of that particular brand. Now they all now, or at least over the last 4 years, including those companies also understood these fellows are all not like other country fellows. Every 3 years once, every 4 years once, these fellows are all not coming and changing the car. And in spite we have to threaten those fellows. After 50 years, our warranty is also over. What will happen to your car? We don't know. Now, how many kilometers run? Just 18,999 kilometers only run in the 5 years. Now, warranty over means that's all. One small spare part will cost you a fortune. Nice English words he will say, because you want to sell the car. So these people are also left with buying a new car, and here they incur a lot of loss. So all of these people decided, I will make one signature. If something goes wrong, if something we are not in agreement, 3 months payment if I pay, lease has to be terminated. That's all. So for me, at any point in time, I am going to lose only what? 3 times of my lease premium, or lease payments, I have not lease premium, lease payments. Now, this resulted into a particular challenge that these are all renting of motor vehicles, it gets read. On this predominantly we don't claim credit, I am not on those pages also. Whether RCM would be applicable, that is the only moot point that comes again and again, because all these are all less than 13 people vehicle, which is used for transporting people. Applicability of RCM, very clearly, it is always told the general maintenance, insurance, upkeeping of the vehicle is always that of the lessee, not that of the lessor. Because of that reason, only forward charge would be applicable and RCM would not be applicable. One of the ingredients of that particular RCM also, fuel cost should be included. Let me repeat. And it's one of the oldest strategy. I would not say today. I'm sure a lot of you will agree with me. They will buy the car in the name of the director's spouse, and then director's spouse will rent the car to the company or the proprietary firm or business. There they they'll make some payments. I'm not saying whether it is a good proposition, bad proposition, all that and all. But all these models are all there in operation. Now here if you carefully see, month on month EMI plus some number is paid as a charge. Now whether RCM is applicable, answer is a very strict no, because the maintenance, the fuel, everything is charged on to the partnership firm books or the company's books. So no stretch of imagination RCM would be applicable. If in case along with fuel, if the car is being given, or for that matter any other motor vehicle is being given other than issue given by a company, then RCM would be applicable. These are the various propositions. After all this proposition, now you say me, what is the RCM payable by this company? It will be very minimal. And I'm sure for a minute just go back for all the notices that you have replied all along. Till yesterday, whatever notices you have replied, many of the notices, I'm sure you will agree with me, your individual strike ratio will be much more than Virat Kohli. Virat Kohli will fail before your strike ratio. If you get a notice for 30 lakhs, you will say, boss, I am not liable to pay even 30,000 rupees. There are, at times we have to pay only 300, 400 rupees. See, I am not finding fault with the notices. Today we have a challenge because not all data is available, not all data is reportable. There is a lacuna in challenges in connection with understanding at the officer's end. A lot of challenges. But this is the practical side of it. That concludes us the first case study and takes us to the next case study. Do we need to break here? We'll break here. Before I have two more case study, we'll break here for a small tea break for 10 minutes and then we'll rejoin. Thank you all for your patience. Thank you.
But if the CHA is himself charging GST on the trade, we still that we still have to pay on that.
First February 2023. No. After 1st February 2023,
Yes.
for the entire gamut it is applicable. RCM for all sort of air, road, both ways, inbound, outbound, everything is applicable. Prior to 1st October 2020, 1st October 2022, prior to 1st October 2022, it was only for inbound ocean alone as applicable.
Okay, after 110, it is
Applicable for everyone.
even outbound you have to pay on RCM.
Outbound and RCM is more effective from the deletion of the definition of place of supply for transportation of goods from 110.22. No, sorry, 110.23 for the last 6 months.
So you're saying that even on
Exports of service.
Welcome back. Moving on towards our next case study, which is more on place of supply. Before me getting into this particular topic, let me make my honest submissions on this particular topic. In connection with place of supply, no much of issues are initially in fact started is my submission. Because a very few officers have really understood the challenges behind the place of supply. A lot of them goes on a very normal assumption as long as a supplier is located outside India, a recipient in India, it is import of service, and the vice versa. Supplier is in India, recipient of service outside India, it is export of service. And in between I should get one forex. The real charm of the definition of 2 of IGST Act in connection with export of service, where there are about
specific 5 conditions that need to be satisfied, all that are all not embraced in a very great way. So I am of a very honest submission. Real issues of place of supply has not at all started. If real issue of place of supply has started, what will happen is, see, all of us have did audit. We all can understand. When I came to audit and I found about 8-10 issues, then my interest to identify issue will naturally come down. There are exceptional people who are all, in fact I still remember my good old days of article, first year of articleship, maybe the 3rd or the 4th engagement that I've been taking up, which is statutory audit of a particular closely held company, limited company. I was very clearly given the mandate, I have to operate in this way, this is the verification for aspects of opening balances, I have to do this, I have to do this, I have to do this. And it is a practice that every Saturday we have to report to the respective reporting partner and brief him on what we have done. Interestingly, today my senior partner, those days who was my principal, to whom I have to go and report, I reported him. I said I have did this review of opening balances, then went on to the process study, what they have done, understood the revenue model, this is the revenue model through which they generate revenue, then stepped into expenses, reviewed the provisioning, reviewed the prepaid, all this I have done, and then verified the sampling invoices. This is the sample size I decided, this is the modality, and then I received the samples. Everything sounds to be right. And this is, I'm talking of those days they used to do about 350-400 crores turnover. Ganesh, you mean to coming out and trying to say to me that everything is right in that company? I said, already there are 4 chartered accountants. So you have to understand, I am a small boy. Now beyond this I cannot question. Whatever with my limited understanding I have, today also I have very little understanding, I hold myself back. But those days I don't know anything. To whatever understanding I understood and asked him revenue model, last date billing, this, that, everything has an explanation. If you never come up with any value additions or any point to discuss, you have not done audit at all. Better next week go and do the same. Next week I came up with 124 issues. All issues are all great issues. In the payment voucher, amount mentioned is 847. On review of ticket balances, means those days they used to keep the travel ticket at all. Only 434 rupees is there. So there is a difference of ineligibility of documents so much. So your audit perception will change. Then the next week he told, no, you don't do audit. In the same fashion, today 1 versus 3B there is different, 9 versus 9C there is different, 9C versus financial there is difference, 2A versus 3B there is difference. How many long years all this issue will go? 3 years. Worst come worst, 4 years. I don't think so. From 21, 22 onwards, 2A, 3B will be really relevant. 22, 23 it will come down substantially. 23, 24 and all, nobody is taking. All of us are all fear for red to varama pathko. When I file 3B, red should not come. They fail to understand. In any case, that will come. No. But somehow people are getting into that mindset. People are, whether they personally agree. If you ask me, I can have my own reservations in connection with, on receipt of document only I am entitled to claim credit. Already I am suffering with one of the client who is a well-established cement company located in Andhra Pradesh, facing a lot of finance challenges, and I am the sole distributor in Tamil Nadu to him. I source all my cement from him, and it's a clean distributor model. From me here, entire Tamil Nadu, 457 fellows who are all dealers, to all of them I bill. Everybody choke my collar on 11th. This fellow Aram say listed company located in Andhra Pradesh, where if I go to my jurisdiction, I cannot do anything. Andhra Pradesh, you go there. I went 2 times and filed an application before the commissioner itself. So do something with this fellow here. He is very clear. 2 months once only he'll file return. Why? Because this e-way bill will get a problem only once in 2 months. April return he will file promptly on 30th June. May return 31st July. And I'm talking of credit size of month on month of somewhere around 4.5-5 crore rupee. And annually 60 crore rupee, I told them. When month of May notice came, see, give me one hearing. Next month I will clear all your issues. The officer was very meticulous. How next month you will clear all your issues? Don't be bothered. By June 20, for 22-23, by June 23, all your problems will get solved. What you will do? Nothing I will do. That fellow will file return. Once that fellow files return, every credit will come. See, this is transaction. I took credit, you took credit. Beautiful proposition was made by the officer. You took credit. Invoice was not appearing, which means you took credit wrongly. Agreed? You have to reverse that credit. And that fellow reported it 2 months later. In that month, you never took credit. So, you are not entitled for that credit. Now this I thought, riskier proposition. So what I will do? I will once again claim every credit in June and reverse all the old credits. Technically for me there is nothing. But unfortunately I could able to appreciate, oh, you can interpret in this way also. No? Correct. What you have claimed is wrong, so pay me that. When it got reflected, at that month you never claimed it. So you are not entitled. I will use 16 for. No, you use 16 for correctly that month end I will claim. Once again, availed and re-availed everything. So, one fresh notice last month came. As compared to last year, you have claimed credit more. Naturally, no. When I claim and reverse, when I do all this magic, naturally it will happen. So, coming back here, various issues are there. One such area which is not touched in a very detailed way is place of supply. Issues of very simple in nature is, at the factory gate, goods are all given. Transportation responsibility is that of the recipient. It is an intrastate supply or an interstate supply. Mark my word, is a very serious issue. No jokes. Very, very serious issue. That usage of the word delivery for goods. For delivery, not delivery for goods, for delivery. Goods sold for delivery. Usage of this phraseology, particular phraseology, for delivery. It is going to be a tough time to organization who sell their goods ex works. That too, preferably people who are not located within the same state, people who are located outside the state. I am going to be a supplier at Tamil Nadu and I supply my goods to Maharashtra, and where it is also for Maharashtra, it is ex works, but as part of the arrangement, I would ask my subsidiary company to take care of the transportation or various other reasons and transport the goods along with an invoice where I call place of supply as Maharashtra. Mark my word, very serious issue that are all pending. But in any case, government is not very impressed upon on all this. A few organizations here and there get notices in connection with it, but for it not the major crowd is touched in connection with all this. And there is still today, we still interpret what is the intention of the lawmaker. It is the actual delivery or constructive delivery. If we say it is actual delivery, then majority of my ex-works case of interstate supply, it will fail. If it is going to be only constructive delivery, then only the whole cases will fail. In this context, getting into place of supply, at a GST level, this issue exists, but I foresee a place of supply issue as a very serious issue, not from in-house or within India challenges. Because within India, in any case, we have one protective section. Section 77 is before us. Okay, what is this? Intrastate supply. I paid it what? Interstate supply. Okay, tomorrow I will pay. I will decide to pay. Very interesting too. Thanks to the government, recently they made an amendment. From the date of payment, within 2 years you make refund. Why I will wait 2 years? Day after tomorrow, after payment, I will make refund application.
and I'll follow with and get it. Interest is not applicable. Penalty at the max, the issue is very big, maximum can be 10%, and again which can also be fought at a different level. Now the core question is not on that. The core question is, if I'm going to deal with somebody located outside India, where the supplier of service or the recipient of service is outside India, and the supplier or recipient in India, when the match is going to be between a person in India and a person outside India, that is where the real challenges in connection with place of supply happens. And we have many areas of which to start with. The first category, where again, first paragraph. Yes. As usual, this group name itself, now we have proprietary. Determine correct POS group. Okay. Now this group of company has a few businesses where the DGGA authorities have stepped in, and they have stepped in under the powers of section 67. They have inspected. They are of the view that for majority of the services done by the organization, for majority of the payments done by the organization, more precisely to deal with somebody located outside India, they are either liable to pay tax under import of service, or their export of service is not an export of service. Keeping that in mind, the first entry, one of a very common entry that we would have come across with many of our clients. Many times organization act as a middleman. They are neither supplier of goods nor supplier of service. Then what they are? They connect the supplier of goods and the recipient of goods. They connect the supplier of service and recipient of service. In other words, we can call them as intermediary, we can call them as marketing person, we can call them as licensing person, by whatever name what we can call, end of the day it is a commission paid. A classic example we would have come across, an exporter will be exporting goods from India to Europe, any of those countries there, to US, UK, German, Japan. His contract is sourced through a person in India. That person will not be paid by this particular exporter. To the contrary, the recipient outside India will pay this exporter a percentage of the exported goods. Normally it is 2% of the export goods value is being paid as a commission, not by the exporter but by the importer who is located outside India, paid to this fellow. No doubt it is received in forex. Exactly same as our issue. A commission received by connecting exporter of goods for a person who is located outside India by one of the companies called Determine Correct POS for Exim Limited. 15 crore rupees is received, where the organization is of the view, we have LUT, we have received the money in forex, we are not liable to pay GST. I am not joking, there is a lot always. I don't buy this point. The point is, all inward remittances, in other words, all forex payment received are export of service. All outward remittances, in other words, all forex payments are import of service. Never it is determined in that way. It is individually determined based on every particular transaction. Here, if we go back and refer to a precise entry in section 13, which says, in case of intermediary, the location of supplier becomes place of supply. And some of the organizations in India are facing a different challenge. The challenge they are facing is, they are exporting the goods through an agent who is located outside India, and they pay a commission to an agent located outside India. And our person, with due respect, is this is a foreign currency expenditure, and if I am a company, do I need to report it in my notes to accounts? The answer is what? Yes. And I cannot explain to a GST officer, not on all my notes to accounts expenses I will be liable to pay under what? RC. And that man comes with a innovative thought. He goes, do you have any registrations outside Tamil Nadu? No, sir. Okay. Give your notes to accounts? I'll give my notes to accounts. He will go to that expenditure, foreign currency expenditure. He will circle that amount. This is what typically happens. He will circle that amount. Into 18% he will put. That should match with my GSTR 9 import of service. Who told? I have a property outside India to store some of the goods or to do some other services for which I make payment. Property is located outside India. When POS is outside India, supplier of service is outside India, recipient in India, there is a question of import of service. Next only comes what? RCM. So what is this transaction? It is not an import of service. No, you pay foreign country. I pay foreign currency here. No, you only disclosed in notes to accounts. Yes, I know, disclosed in notes to accounts. It's a foreign expenditure payment. See, when differing laws are there and there is a differing requirement for me to report, not every road will lead to Rome. At times, different road will lead to different location only. My purpose of reporting is different. That cannot be equated with this. It is something like whatever reported in your 26 AS, it should be your income. Who told? There is nothing. For advances and all, people will deduct what? TDS. This is what I have been told. And if I have been received a huge advance, how it will match with me? At no stretch of imagination it can be bought. So coming back here, intermediary is one strict area. Intermediary payments, RCM is not applicable because it is not an import of service. Intermediary income received, we have a straight challenge. It is not an export of service. It's straight away not an export of service. If you are going to come out and say, this 15 crores, can the organization claim LUT, Forex, FIRC? Nothing doing. They have to pay what? GST. Now when we convince a client to this level, now all of us have one challenge. What is the challenge? On 15 crores, I have to pay what? 18%. No, interest and all is always there. When you agree for tax, interest is automatic. We already have Pratibha process laid down by the Apex Court. When interest is there, tax is there, interest is automatic. We have another problem. Yes.
Expense. We can't collect from the customer.
It's okay, you reduce your income. Whatever money received is including tax. That's all. Another party decided not to pay tax. There is a presumption under the burden of proof is on the recipient to say that you have not collected. If you have not collected, earlier at least I have to say come tax and all. Now I have Rule 35 against you. I'll simply say if you have not collected, your money is inclusive of tax. About more than 16 decisions become redundant because of this one rule. I have to use all 16 decisions and cry before a service tax officer. Ayya, come tax benefit. Ayya, take straight away Rule 35. So that's stopped. Come tax is automatic. Yes. If we convince a client, now we have a very serious issue. Do I need to now pay CGST, SGST or IGST? No, it's not that easy. For a minute think. You are a supplier in India. Your recipient is outside India. Place of supply, India. Yes. Very simple, Ganesh. Location of supplier, India. Place of supply, what? India. It is what? Intrastate supply. Who told? To apply this logic, when I go back to section 7 of the IGST Act, it will start when supplier and recipient is in India. My supplier and recipient is not in India. There is a differing point. No joke. Currently, the matter is being decided by the Maharashtra Bombay High Court, saying that there will be a liability of GST, and the said liability of GST would be IGST. So, international transaction, priority to tax liabilities, everything is with the central government. IGST is payable. Again, there are conflicting views. There are views which comes out and say CGST, SGST is payable. We are all reached one state. Now, asking client to pay for an export service is only difficult. Having paid IGST, paying CGST, SGST, it's there. Now, one of the common problem here that has been placed is how will I report? I think reporting or all is getting taken care very recently. We have something called as other country, particular service code, 96 if I'm right, 97 other territory. These are all codes that are there. Earlier used to be those challenges. Now all these challenges are over. Now my main points for endorsement is commission received by a supplier for providing intermediary services or licensing services are not a export of service. Similarly, any payments made to foreign country outside India for intermediary services, all this is not liable to RC. When on one end if you pay, let me repeat, on one end if you pay GST they are silent. But on the other end, if you say the agent is located outside India, RCM is not applicable. I am sorry, it will be a very tough point to be appreciated by an officer. They are not ready to accept it. They say, no, I will issue notice, you go and do whatever you want. Unnecessary litigation, but any case, that is a disadvantageous point that we have when it comes to this. So flip side I have answered, if we pay or if we receive, both are going to be covered over here. Sure. When it comes to a next entry, which underwent a very recent change, is transportation charges. More precisely, transportation of goods by air and sea. When it comes to transportation of goods by air and sea, the first change came on 1/10/2022, where from that particular day, from 1st of January 2018, one exemption was granted, and that exemption notification would have been on an average amended for some 8 to 9 times. Dates are being postponed. One fine day, government decided nothing doing. From 1/7/2022 onwards, any services provided by an aircraft or an airline located outside India to India, or any aircraft providing services from a place in India to a place outside India, or any vessel providing services from a place in India to a place outside India. Let me repeat, the whole discussion becomes more relevant for some of us who has clients only on the CHA segment, freight forwarding segment, or transportation of goods segment. I don't have client here and all. Your life will be beautiful, mark my word. Because two challenges. One, having a client here is, I'm not saying it is very, very difficult, because what all we correctly say will not be followed by his peers. And for a businessman, his peer is the Vedavak. Not what we say and all. No, he is not paying. Sir, tomorrow he will not go to jail, sir, for his operation size. You will be, sir. If tomorrow if I aggregate the non-payment of tax, his money is less than 2 crores. Yours is 20 crores. Pardon my French, but challenge is, this is what? This is the challenge that we are facing. Now, coming back here, getting into this particular entry, when that exemption deletion resulted in taxability throughout, the next proposition change was removal of a particular entry in section 13 and 12. In case of transportation of goods other than mail and courier, where the place of supply which used to be the destination of goods, that particular entry got deleted. Because of this deletion, the rippled effect is, I may be dealing in goods, I am treated at par with any other client. If my recipient is located outside India, then he is the recipient of service, I am the supplier of service. If I receive money in forex, it is treated as what? Export of service. Very few people in the industry does. On the flip side, I pay to a foreign entity To get space, I pay to a foreign entity to clear the goods in that country. Let me repeat, in that country. Goods itself is in Singapore, goods itself is in Hong Kong. To clear the goods in Singapore, to clear the goods in Hong Kong, I pay him. Supplier of service outside India, recipient of service in India, place of supply is India. After deletion, let me repeat, after deletion. Prior to deletion, it used to be the location of the goods. Can you able to appreciate the difference? If place of supply is in India, it becomes an import of service. If place of supply is outside India, it is not an import of service and it is not liable to GST. I am not joking. For 17, 18, 18, 19, already both the departments has unanimously decided, including DGGI, we will say it is import of service. You do draw, you give a diagram, you say it is import haulage, that is export haulage, there is ground clearance, there is a customs export side clearance. You give documents for everything, including export customs duty discharged by that fellow, which has been reimbursed by you. On your entire 47 crores, on your entire 64 crores, these are all payments done outside. You only reported in your notes to accounts, RCM applicable. So this is one challenge, but from the period 1st January 2018 to 30th September 2022, place of supply plays a very, very, very prominent role, read along with the exemption notification, entry number 19, 19A, 19B. These are all the connecting points. To the contrary, after October 2022, the exemption got omitted, so taxability comes into play. At least place of supply was supportive to us. Place of supply in India, place of supply outside India if they deal with the international organization. Now, that too after October 2022, after deletion of place of supply entries, it became universally clear. If I make any payment to a foreign fellow, it is treated as import of service for providing those services. Here also there are differing views. Let me repeat, I pay to an agent is intermediary. See, are we executing an agency contract? Because that organization, that industry use these words. You are my agent, I am your agent. You are my agent here, I am your agent here. But unfortunately, though the terminology that is being used in that way, they don't behave as an agent, they actually behave as a principal to principal. So it has its own challenges, but my core point here is, in case of transportation of goods, those transporting organizations alone will have. See, forget importer of goods, exporter of goods, they will not have any challenge at all. They are all very comfortable zone. I am only discussing about those organizations who support an exporter, who support an importer in clearing the goods. An importer in India will say, sir, I have a goods in Singapore. I want you to clear the goods from Singapore to Sriperumbudur. The contract itself is given like this. I don't think. In Singapore, in my parent company, stock is ready. If you go, you can lift it there. So this fellow who is here, he has to arrange the local transportation from the factory to the Singapore port. From there, again, local clearances, customs clearances at Singapore port, then towards the other channel, and then airlift it, then get it down to Chennai, then clear it at Chennai customs, then go and give the goods at Sriperumbudur factory. End to end, you are operatable. Can I call myself as an MTO, multi-transport or multi-modal transport operator? When very cleverly read the definition of the term multi-modal transport operator, he has to perform the service in India. Unfortunately, I am not performing my service in India. I perform some of the services outside India, some of the services in India. So what I would be called as mixed multi-modal transport operator. That's all. In any case, this is a little subject with its own technicality. As long as we could able to embrace that particular business model, we can appreciate it. Else, it will have its own challenges associated with it. All that I want to highlight here is, there is an amendment. let's be a little more conscious. This amendment is effective only now. If some of our clients who have not paid RCM, my recommendation is let's pay, claim credit, avoid. No, we'll call him as agent. See, I often go by a principle called as, if a client comes at the last minute holding his chest and gets himself admitted at an emergency care, that day we will speak about principles of agency, involve 127 of Contract Act, 128 of Contract Act, then invoke intermediary, 13.8, all that is there, all these are all there, just park it. Now he came for consulting. When he comes for consulting, when he feels I embrace some small pain on the back when I walk fastly, call him, treat him differently, that's all. So till next year, November, we have time. So we can do something. Yes, sir.
Sir, there are a lot of clients who are actually sending the people outside India who are getting the seats in various universities. So they get the commission from the various universities, and they are also treating it as an export of service, because they also advertise for them and then get the students and then send it across, and also do a lot of other services like publication trainings. Thus, the again point of supply will consider it as an intermediary services.
In your case, very precisely, yes, sir. It will be considered as a place of supply. If my memory serves me right, we have 2-3 AARs against you in connection with this context. Already it was an established fact. So, if you carefully note, the services are provided by the universities located outside India to the student or the proposed student who is going to be enrolled in the university. Then what is this institution is doing? It is just connecting two people for supply of service. It squarely fits in. Allowability as an export of service will be a very tough proposition associated with it. In spite of me going to give any color, I'll call it as license, I'll call it as education consultancy services. Everything I myself tried with enough proposals and then decided no, let us better pay 18% and accordingly say to that fellow, give me more. That's all. And in this process, in a little different way, the moment we start paying 18%, we can start use of all the advertisement, this, that, rentals, because all these organizations usually pay a little more extra money for all this. So all these credits can be enjoyed and utilized for it. That was a strategic call that was taken, where we are left with. End of the day, about 6 to 8% was cost. That was increased by informing the principal. Yes.
So we now spoke in the context of these middlemen, right?
Or intermediary. Yes, ma'am.
So what about the principal is using, I mean the main, not principal, just the company is using the service in India of an intermediary, say a CHA as I said. So in his bill, he is already charging GST on the ocean freight or whatever.
No issues. He will be
There
charging.
is no more RCM.
There is no more RCM. There is no more. As long as if it happens within India, we will not have this. It's more of outside India to India. This entry itself will have its trigger more if a person located outside India.
This CHA is obviously using the services of someone overseas, so that RCM is only for him.
See, CHA, again, here this is where the challenge. When it comes to CHA signs an agreement with the principal saying that whatever I source from third person, I will give it back to you. There are possibilities. CHA might source a space in an aircraft from outside. Let's say a particular airline. From British Airways, they have sourced a space. They may, at what price they bought, they can sell it to you at the same price.
Or maybe not, we won't know.
I'm just assuming. They can sell it to you at the same price. They can also put a markup and sell it to you. If they put a markup, usually the practice is they will charge GST. If there is no markup and they operate on a very thin margin or no markup, or sometimes what will happen is British Airways will say whatever freight at which you book, I'll give you a commission independently to you, which is non-known. At that time, in fact, we will get a bill from the British Airways invoice itself. So much dollars we have paid, only the the equivalent forex differences will be there, that's all. So that will come back here. In this circumstance, there's a possibility of RCM at your end. So how CHA bills is more important.
Because there's sometimes cases where they don't even charge freight because they just want that volume. They probably have a contract with the airline, so airline or sea, not more with the...
So my point is very simple. CHA's invoice 10 lakh rupees, but GST charge only on 1 lakh rupee. And they collect from you 10 lakh 18,000. For 10 lakh, GST cannot be 18,000. So that is the simple basis. So if we get into it, we will be able to know what is the breakup, what reason, what he is calling as pure agent. Because many times CHA's challenges, he will be quiet and transfer. And when everything dwells upon at the last level, only then, because at their level they will simply say it's a pass-through transaction to me. I have sourced for somebody, I have given to somebody, it is not my revenue, it's a pure agent activity. In fact, it is not passed through my P&L account, it is passed through my balance sheet. These are all enough settled positions for CHA we have. At that end, the recipient will have the challenge. Now, of course, we can debate who is the recipient, all that and all. But when we have a CHA bill, let us be little conscious. Two areas are challenged. One is freight, one more is GTA. GTA also, this pass-through will happen from CHA. CHA will say, I will give you an independent, bill for which you will pay. I will not pay under RCM. So both is possible. Quickly coming back over here, on to my next entry is also on the same line. I am not stating much. We have enough discussed. Both air, both sea, same principles apply. Does not make any difference. All the exemptions are all withdrawn. So all are at pari passu levels now. Quickly on to a last entry on technical testing. As far as technical testing is concerned, or it can be on testing, technical testing, certification, or something to do with goods. A testing on goods, a certification on goods. Now, many organization or clinical trial organization provides various testing services, and these testing services are often provided to a person located outside India, but entire test will happen in a lab in India. Now, here the challenge is getting challenged off. What is my place of supply? Is the place of supply is the place where I perform the clinical trials, which is in India, or the place of supply is going to be that of my recipient who is located outside India. Can you able to appreciate it? Exactly same is the issue of this particular organization who is involved in technical testing, where they test on goods received from other foreign countries, and they also send goods to other foreign country and get it tested at the other end also. They do both. Here, about 5 crore rupees they have received in connection with doing this technical testing certification. Very interesting to know. It's an information added over here. About 1.5 crores of revenue rises from pharma companies. That is to say, I may be providing this technical services, testing services to various organizations. Among them, of 10 people, if I test, 1 or 2 people might be pharma companies. Now, why this topic becomes important? Please appreciate, today clinical trials are getting in a very big way. Majority of the hospitals signs up MOU with various organizations located outside India, and they come out and say we do clinical trials. And somehow all these people are all got convinced if you get money in Forex, it is an export of service. And all that you need to have is in your hand only one document called as LUT. Honestly, if you ask me, in GST, one of the easiest thing to do in the earth is LUT. Because on just 3 click of button, by giving the same employee proof, who is not even no more an employee in that year. See, very interesting to note, when LUT renewal comes, it's a standard practice, we all of us will send a mail. For which all we will ask is, send me one witness photo. Last time one fellow is there, no, give that fellow's. The last time whom you gave, it's there in your mail, you can take it out. Thanks to Google, which allows us to go back and
pull all the archive data now. I am not against it, but I want a confirmation, is that employee is still continuing with you? And importance of an LUT can be really appreciated only when forex in an export of service, if forex is not received or the fellow has not exported the goods within 3 months from the date of clearing the goods. These are the two circumstances. If they have not received the forex, the moment 1 year lapses, on that day exactly LUT lapse. Exactly LUT lapse on that day. And very interesting to note, after that they may not be aware that they have not received forex, all this. Whatever transaction done after that date, all are treated as taxable supplies. And with the day in which it got cured, on that day it get automatically restored back. So officers, the moment they understand Rule 96 capital A in a very detailed way, very tough times are going to be there, preferably for service provider who provide export of service and has not received their forex within a period of 1 year from the date of issue of invoice. And to that extent, many times officer never dwell upon on details. Coming back here, is it an export of service? If you carefully note, place of supply is in India, the goods certified in India, the clinical trial happens in India, on the goods everything happens, performance in India. We have a performance based service, entry number 13.3 is very particular. In case of all those services performed on the goods, if it is going to be performed, then place of supply is location of where the services are performed. In our case it is going to be India. The exception to the rule is, in case of pharma company, there is a notification 4/2017 which comes out and says, in case of pharma company alone, it will be treated as location of recipient. For pharma alone recipient, this is a very interesting point. If you are doing jobber, then for you this performance based service entry is not applicable. So I will bring the ship all the way from maybe Spain, maybe from France. I will do the complete shipbuilding activity at Cochin, and when I send it back, the entire activity is performed in India, but it would not be considered as a it would not be covered under this particular entry. It will be covered under the general entry. Location of recipient becomes place of supply, and it will be treated as an export of service. In the same fashion, if it is a pharma company, then it would be export of service. Other than pharma company, it is not an export of service. Place of supply is in India, and it has to be taxed in India. Let me repeat, these are all very minuscule versions of it, but if we touch at time, the whole foundation of the organization will get shaped. Very interesting to note, on an audit, we have been, they said we completed 9, we completed 9C, 9 will match with books of account, 9C will match with this, all were done, ITC was properly taken, everything was given. Officer in fact issued the documents within the next 14 days, all 11 documents which are called for was given. Nice officer. Come and shook the fundamental of the organization. And very interesting note, it's an institute that has been doing clinical trials for years together. The institute is running for its 60th year, starting from the mosquito coil, ending with some of the hyper technical items. Everything gets tested by them. Only on that day only I know, for rat and all they will have history. At one point in time I decided, they have been speaking, I never got convinced. No, how you do trial, I'll come to your institute one day. That time that fellow says, so this fellow, no, this fellow's father is only this fellow. In the rat shelf they have. Then this fellow's grandfather is this fellow. So this fellow's great grandfather. So we have tested all 3 generations and told medicine will work for him very smoothly. Now any case, my core point here is all this testing activity happens in India. Place of supply is in India. If you do it to a pharma company, yes, it is outside from the net. Else it will be taxable in India. So that is in connection with on place of supply. Quickly getting into one area which in a way starting to lose its importance, and today almost all of us are convinced, gone are those days where people want to try unique method, different way to exclude values. Today everybody is clear on the entire value what I collect, I have to pay GST if GST is applicable. If it is not applicable, then the whole story is different. As simple as that. On the other day we have been discussing. I'll just give a reference and walk away. It is not my talking. Fellows have been on the evening consuming pan. There are many pan shops which are all famous post Purusharava. Prior to that, on the North Madras, it's many places it is famous. Our basic question got raised: pan is taxable or exempted? Then after a very detailed research, one of the fellow came up and told, no, pan on entry itself is not there. So if pan on entry is not there, then we have to identify the closest entry where we can fit it. We have something called as mouth freshener. This mouth freshener and pan is equivalent. I'm sorry, pan comes up with some digestive, qualities. It is an appetizer. It is no more all that stuff. So it is not equal to mouth freshener. So where we can we treat it along with betel leaf? Now what is the advantage of betel leaf? Betel leaf is exempted. Somehow we want to put it under exemption. Now one fundamental question arose. Pan is what? It's a supply of goods or supply of service? No, you get it as goods, but somebody folds and give you. Now the moment you say service, then you have schedule 2, para 6, clause B, which will say any article of human consumption which is being consumed by the person. See, please note, it is never used the word an article of human consumption. They never use the word food being goods. There is a usage problem here. The moment if you use the word food being goods is different from article of human consumption. An article of human consumption, yes, is it an article of human consumption? Now, a very big debate is going on whether pan is a goods or service. Now, we will not stop here. We have HRMC, we have EU VAT, we have EU Supreme Court. Then, after a great debate, we went to EU Supreme Court, one decision, principles of classification, how to conclude it. All that we quoted. End of the day we told, no, it cannot be a service. Where is the service? No, folding and giving and all is not service. Who told folding and giving is not service? Any activity which is not a goods. That too, here we have some problem with pan. We have something called as fire pan, we have sada pan, we have silver pan, we have, one fellow came on the other day told, we have something called as alcohol pan. Now alcohol pan subject to various other challenges because it contains a product which is not leviable to GST. Now he says, if everybody has one issue, I will have one unique issue. How to value it? Now immediately, see, problem with all the fellows who read this, he wants to implement whatever he read. The fellow immediately says, when there is no charge, there is no levy. Why no charge? You told it, which is article of human consumption, sorry. Alcohol is not leviable to GST. So something which is not chargeable cannot be valuable. So when charge fails, valuation fails. So he went to B. Srinivasa Shetty, 1956 Apex Court decision. Why you want to sada pan baneda sabuna? For which, why so much? Now why? Because so much unique ways everybody identified. Somebody on the other day advertised 30 lakh rupees 2 BHK in Annanagar. 30 lakhs 2 BHK in Annanagar. Tomorrow we will book. Then he will call and ask, you want ordinary home or alai paide home? What is the difference? If you ask people who saw alai paide, they will know. We will give you only shell. Plaster, door, MEP, that is mechanical, electrical, plumbing, that and all you should take. See, you never saw alai paide, it's alai paide home. You go and see, screen, kannadi irukadu, tattata maati vechirukkom. So, further court discussion. You want all this, MEP 10 lakhs, plastering 20 lakhs, you want car parking? I want car parking. One car parking, two car parking. Each car parking 5 lakhs. You want with land, without land? I want with land. Then 40 lakhs. Then I land up with a very fancy number of 1 crore 80 lakhs. Now you say me, like 30 lakhs is taxable or 1.8 lakhs. Great grandfather says we have concluded. 2006 we have buried all this innovative ideas of coming up with what?
If this is not taxable, that is not taxable, this is out. No. If any of us have challenge, my humble submission is, we have section 15, subsection 2, clause C. Suddenly in between he will use a phraseology. Any money collected, look at that word. Any money collected by supplier for anything done. Till the day I had my own thoughts. After reading 15.3c, any money collected for anything done, I decided myself, entire amount will be leviable to what? GST. Now only debate is what rate. For which section 8 clarifies, mixed supply, composite supply, somewhere we can conclude. Core principles, reimbursements. Whether reimbursements are leviable to GST. On the reimbursement, I am sure different methods are followed. Some of us would have, during bank audits and all, we would have claimed some reimbursements of ticket. Actual reimbursement, correct, actual reimbursement. But will we satisfy the conditions more precisely? The 7 conditions that are raised in Rule 33. If you do an independent test, I am of a view, we may fail in 1 or 2 conditions. So to avoid that, we started to charge GST or avoided the reimbursements. Now in this reimbursements, a unique concept came up later stages was, I will agree for one value, later other party will source that item and reduce from my cost. Can we able to appreciate? I agreed a contract for 150 lakhs. For some reason, every goods, every service in my scope only. But for some reason, I am unable to source the goods. My recipient will source the goods on behalf of me and he will supply to me, but he will not make me what? Payment for that 10 lakhs, 20 lakhs. In that circumstance, do I need to pay for the entire value GST or only for the balance? Now here, I want to place on record one of the oldest decision, a very famous decision which is upheld by the Supreme Court, actually a large bench tribunal decision in 2014, is Bayana Builders. The facts of the case goes like this. IOCL floats a contract saying that pipe I will buy and give you. Bayana Builders' responsibility will be only laying it in it. When something is already excluded from the scope of supply or scope of contract, it cannot be added back. That's all. That is the core principle of it. I am not beyond that. If already that is included, we cannot do anything about it. But if already it is included, please read 15.2b. It will say when recipient pays to a when recipient pays on behalf of a supplier. Actually, my supplier has to pay. On his behalf, I paid as a recipient. Then that value should be added, which means the 20 lakh rupees should be added. So a core principle on this, which that alone I want to read, because of late contracts goes on this way. I know by myself I cannot buy steel and cement at a particular price at which this builder buys. So I will say, give me 1,750. I will execute the contract. Steel and cement is into your scope. The contract will speak. Let me repeat. The contract will speak very clearly. The scope of the supplier of service does not include steel and cement. Excluding that, I charge 1,750. Can officer invoke? No, you have to add value of cement, value of steel into the contract. Answer is no. The no comes not from the 15.2c and A, B, 15.2c and B and all. Simply will say it has to be added. The principle is laid down at Bayana Builders. From Bayana Builders, the principle comes. So that is in terms of reimbursement. Please be doubly sure when it comes to reimbursement, at least in GST, because of usage of this subject. Quickly on to two important challenges which in valuation we are facing. One, organization which has multiple location operations. I am sure we all will know there is one model called as cross charge, because one branch will provide services to the other branch. And in the oldest model, when I supply the goods to my own branch,
I would be calling it as stock transfer and it is leviable to GST. Now the new problem that crops up here is, at what price I should value my stock transfer? Under the erstwhile regime, I used to get Form F, it gets out from the tax net. Today there is no question of Form F. Today I have to bill my own branch, my branch has to enjoy the credit. And they have to discharge when they sell. Now the core question for us is, at what price I have to value it? I make the product. It's a centralized market. The factory is located, for a minute, let's assume Chennai. And there are about 8 locations in this country I have to send the goods. The product is completed here itself. And now I have to transfer it. At what price I should transfer? If you ask me, the organization has a policy. The organization policy is, we have a MRP minus 40% we will sell to all the organizations, including its own dealers distributed within the state. Everybody I will sell at 40, rest individually. The new CFO comes, why 40%? You are wasting your cash flow, this, that and all. They are not finding fault. His version is, you can save a lot, unnecessarily money is piled up as tax. Better what we will do, we will from the MRP reduce to 30%, sorry, we will only bill on the MRP only 30%, that is 70% reduction. Now, suddenly GST comes down, officer gets excited. Last year, your factory paid 4 crores in cash. This year, your factory paid only 2 crores in cash. What is the change? Our people will write the change in the methodology of accounting, valuation, this, that is the reason. Straight away he comes and holds. See, everybody you are selling at 40, meaning which is 60% of your MRP, you have to sell only at 60% of MRP. You are not supposed to sell at 30% of your MRP. Now my question is, we have already we have a provision under Rule 28 called as in case if the transaction is between the related person and if the recipient is entitled for full ITC, the phraseology is like this, if the recipient is eligible for full ITC, the price that is mentioned in the invoice will be accepted as transaction. Now, full ITC means? What do you mean by full ITC? It is now 2 propositions I will make here, because we have, if my memory serves me right, the earlier AAR which created this problem was GKB Opticals. This is where this problem started. Full ITC means what? It is qua transaction or qua recipient. That is to say, my recipient is entitled for what? Full ITC. Which means he should not be involved, not even reversing 1 rupee as what? ITC. If he reverses 1 rupee as ITC, then that's all. So, that to other party and all, now new question comes. If we reverse something for 75, is that considered as reversal? Yes. So, this full ITC is what? On a research that we go on this, we all know from everywhere, the laws are all will be somewhere sourced from. Original scoring. Okay, when you go back, the original scoring, something which is very closest to these arguments are all is the Singapore GST law. Very interesting to note that Singapore GST law has a word called as full ITC. And they define anything which is less than 5% of their exempted turnover, they no need to reverse at all. And based on that, certain other concept of de minimis, various legal propositions are all getting posted. Now the point that I want to drive home here is very simple. This full ITC is not very clearly embraced or not clearly defined. In this proposition, organizations has to be little careful, because if they have a stock transfer, let them do it at arm's length price or at a reasonable price. Taking some very vague proposition, I'll bill at 1 rupee, I'll bill at 2 rupees. Already my goods includes the value of services I provided. So cross charge is not warranted. These are all very tough propositions to take up before adjudicating authority.
or unless otherwise it is not properly backed up in terms of the working. So those are all the challenges that we have in terms of stock transfer. Don't underestimate it. No, I have second proviso to rule 28. Whatever value I will mention in invoice, as I told you, is it qua transaction or qua recipient is first dispute. Even if it is qua recipient that we take, your recipient should not reverse 1 rupee or ITC. Given in today's, from last July 2023 clarification, every fellow will reverse credit and reclaim credit. In a modality like this is going to be little tough associated over there. Quickly on the last point for our discussion. On discounts, various challenges are there. I am not on to the regular discount. I am now on to a unique challenge that few organization alone faces, which is on quantity discount that are being given. If we buy 10, they say I will give you 3 extra. Now, very interesting note, 10 is being sold for X price, 25,000 rupees, let's say for a minute. But it has been known to us from the day in which it is proposed, you buy 10 from us, 25,000, you will get 3 extra, which is as simple as a quantity discount given. So, 13 goods is billed for 25,000 or 20,000, as the case may be. Now, the officer proposes saying that no, 3 units is free. So either you reverse ITC under 17.5 or pay GST considering it as a business asset transferred without an adequate consideration under Schedule 1. Now the proposition that I want to appreciate over here is when we go back to section 7, supply of goods for a consideration. Do I have a consideration here? The answer is yes. Very interesting note. It is a quantity discount, but very tough to argue and get it win over on these concepts. Mark my word, it's not at all. Maybe at the next level they don't find challenge. If we are, I am now talking from the manufacturer perspective. I am not talking from a dealer perspective, because dealer is very clear. 20,000 units you will get at what? 20,000 rupees you get 13 units. I am not at a dealer level, I am at the manufacturer level. At the manufacturer level, they are facing these challenges. Because all these promotion schemes, this, that, mailer, circulars, everything, one copy is also department is with them. That fellow has something. From where he got it, now we don't know. That fellow, no, you have one scheme called as cashback scheme, no. Cashback scheme and all, my dealer will know, yaar. You are a DGG officer, why you are? No. When we went to that dealer place, he gave. So from there, you are giving cashback scheme. Now for this incentive, GST who will pay? It's very clear, cashback. And that's what GST who will pay. It's cashback, yeah. It's a transaction in money. Transaction and all, not money. I supplied goods. I paid my GST. He paid me back within 30 days. So I gave him cashback. No, not cashback, incentive. It's not incentive, cashback. One big fight is going on. No, it is income to him. Income or expense and all, how I can decide. How he reported, I don't know. He can reduce his purchase. Can you able to appreciate it? He can reduce his purchase, or he can also offer it as what? Income. No, have you deducted TDS? Did not cross the TDS threshold. See, for everything we have an answer. So, these are all the unique challenges of some of those organizations who deal in next level. But in any case, these are all my broad thoughts on this, some of the case studies that we have chosen today to discuss in connection with valuation, place of supply and RCM. Any questions, anything that has been unanswered by me? Yes, I would take it up. Yes, sir.
Sir, for a client, they are supplying the goods, so the goods will be taken at the client place. No? But the supplier is at the other state. So the place of supply, as per the rule, it should be within the state, like Tamil Nadu. So, but if they are filing GSTR1, at the time of filing GSTR1, he is a registered person. It is not accepting the CGST, SGST.
No. Can you brief me once again? You are supplying goods.
Yeah. Client, ex-client.
Okay.
So they are supplying the goods to a party. For example, Andhra Pradesh. They are supplying the goods. So that party is collecting from the Tamil Nadu goods. Collecting the goods from Tamil Nadu. So I think place of supply should be Tamil Nadu because delivery has happened in Tamil Nadu.
No, delivery is not departmental. You will bill whom? X is your client. You will bill.
Andhra Pradesh client, registered person.
Y is Andhra Pradesh registered person.
Registered person.
Then how you deliver the goods in Tamil Nadu? You should have delivered it at Andhra Pradesh. No, you are delivering at Tamil Nadu. Y has office in Tamil Nadu?
Yeah, they have their own vehicle. They will pick up from the X place to Y place.
X place, which is you are talking of X works. Similar to X works.
Okay.
This is X works. At factory gate you will give. At X location you will give. See, as of now you will say it is in the course. The movement is carried out by the other person, other GSTN. For a minute, sir, it is not saying it is not accepting. It is saying that if you select place of supply as Tamil Nadu, it will say IGST invoice is not possible. Please note, IGST invoice is not possible because your supplier number, recipient number will be Andhra Pradesh number, and you want to create a CGST, SGST. So it will say IGST is not possible. CGST, SGST is not possible. Okay. This is a challenging. See, this is why what people will say very simply, they'll put Andhra Pradesh number and give it to you. See, and again we can very fundamentally question, credit transmission and all will be not there, chain will get blocked. So procedural issues are still on, sir. I'm not saying. Procedural issues are still on. Thank you all for effective and patient listening. Yes, sorry.
Certification, if there is a
Yes.
Yeah, there's an international organization based obviously outside India, and they are doing a certification of a certain process to give you that certification. But they don't come here, they're not registered under the Income Tax Act. They claim they don't have a place of supply here or whatever.
Understood.
Yeah, so they don't have a permanent establishment or whatever you might call it. They don't have a PAN either. But they have some local agencies here, inspection certification agencies, to come and see whether you have the processes to issue you this certification. Payment is remitted overseas.
Okay.
Will this attract GST?
There is certain organization who want those international organization to be certified them. These people will be paying those international organizations.
Right.
Correct?
Yeah.
Now, are they certifying a process? Are they certifying a product? Process, which is more of documentation. For the time being, I presume it is something like ISO process, something like that.
Yes.
Here, it will not come under this particular category of testing charges and certification. We have talked about the product, something to do on goods. Performance on the goods is the place where it is performed. This is on process, documentation. It is something like I go to the next door company in India, do a due diligence for somebody located outside India. I am providing services to a person located outside India, export of service, if it is outward. In the reverse, in your case, organization from India who pays, they are all import of service for them.
No, see what happens is there are two payments which goes. The payment goes to the international organization. Payment also goes to the local inspection guys.
Local inspection guys is within India. It's a domestic transaction.
Right. So the payment I'm making overseas.
That alone is import of service.
So that will come under GST.
RCM, yeah. Comes under RCM, import of service applicable.
So now, how is it that the other organization doesn't, they don't have to register for a
No, they don't come here. They are located outside India.
The source of income.
We pay 130 rupees for month on month to Google, where Google Ireland Limited is located comfortably in Ireland for giving 100 GB cloud storage. Simple. That's simple. That's all. I need to have here. Yes, sir. Yes.
So we need to pay RCM on that.
On
Yeah. Google service.
Google services. It was very clear in my word, man. We pay. It's not a business. So RCM not applicable. So if it is going to be for your company, you're going to use this X services, then Google India Private Limited in India will raise invoice. It's a B2B transaction, I will do business in India. B2C transaction alone, I will take it outside India. Ireland, less profit, BEPS, all clean strategy. Yes.
Sir, one of my clients, they have two sister companies. Sir.
Yes.
Both are located in Andhra. They wanted to sell product which is imported to Nagaland.
Okay.
So the imported goods were received in Gujarat port.
Okay.
So their registered place is only in Andhra.
Correct.
So one of the sister concerns has been blocked by the Nagaland company. So they wanted to sell through other sister concern.
Okay.
But not the one which imported the goods. So the goods were imported by A sister concern.
Okay.
It was sold to B sister concern, and the B sells to Nagaland.
Okay.
What would be the place of supply in the first?
No. Before place of supply, B is also active.
Yes, sir.
B's registration, all that is active. The blocking you talk of from Nagaland perspective only.
From vendor.
Nagaland vendor perspective, correct? A will import if at West Bengal, Gujarat. Okay. A will import at Gujarat. A will keep the goods at Gujarat. A will sell to B without transfer of movement of goods by transfer of document title to goods. B will get the transfer of document title to goods. From B, you will sell it to Nagaland company. Movement of goods will happen from Gujarat. So it's a bill from, dispatch from, and delivery at a location. Movement of goods will go through e-waybill. Here A to B, you will raise invoice. You will say A is also in Andhra Pradesh, B is also in Andhra Pradesh. You will raise an invoice A, B, IGST invoice you will raise saying that goods is located at Gujarat. If this is practical, if in case you feel no, why IGST invoice, I'll put CGST, SGST. End of the day, by transfer of document title to goods, the location where the goods are located, that will become the place of supply, that becomes Gujarat. So that is how it has been made. Thank you. Yes, ma'am.
But e-waybill portal, does it support bill from, ship from model?
Bill from, dispatch from. Bill from, dispatch from, bill to, ship to. All four. Combination of 2 and 3. Combination of 2.
Does not permit it.
Combination of 2, combination of 3. This is combination of 2 and 3. All 4 address. Due diligence. Why you are billing from here? Why you are delivering there? So all this has to be explained. I shows the goods because bill of entry will have the A importer name. Okay. And now you are moving with that document only. From now, how B got its right? Now we have to say no. B got its rights from A. A is the original importer. We got it without movement. So all this has to be established. One big 2-page letter should go along with the documentation possible. Yes, ma'am.
The manufacturer has a steel conveyor belts he's manufacturing. So he has steel scraps coming up. So they constantly they value it and they'll be selling it. Okay, so at the year end in the balance sheet they have valued it as reusable scraps and scraps that can be sold. This is steel arising from the manufacturing entity, scrap steel.
Okay.
Now, they are paying GST on it, both ways. Okay, reusable scrap is used once again and the other scraps is sold. So department has raised a demand that you have to proportionate ITC reversal is to be made on the manufacturing scrap that is arising. How is that work?
Ma'am, I am unable to buy the point on, see, when as long as your scrap that you generated is sold for a price and that price can withstand section 15's applicability, that is, it's unrelated person and price is the sole consideration. I am of a view there is no question of reversal. Your reversal will step in, only the scrap which is generated has to be disposed of without consideration. And that disposal also is part and parcel of the process. Again ITC reversal will not come.
Yes. Because there are in Central Excel.
Yeah, we have same decisions we are going to borrow. The problem here is,
What he says is, when you go to steels, maybe you paid 60 rupees. Now you're paying only 20 rupees when you're selling it.
that is what it fetch.
Whatever.
That is what it fetch.
Ask him to buy.
There is
Ask him to buy.
a Anita Suman High Court decision on this inherent.
Inherent loss ITC reversal is not required. Yes, yeah, Madras High Court decision. But when, let us not get into this. By process, it is not eligible. See, I should. This is a process loss for me. This is not something even an abnormal loss to me to, on a costing perspective, to go back and credit my costing P&L and all. This is my normal loss.
One more.
Yes.
Medical foundations, as part of hospitals, they are conducting workshops where they are conducting what I would say, they are not telling it is a sponsorship. So, but they are telling that it is a workshop where they ask a lot of this medical companies.
They will endorse the product, ma'am. They'll endorse the product. That is you. What that product contains.
They are allowed to come and install stalls there. You know,
Okay.
Surgical. Our client is one of a medical company where it's from Germany they are importing the surgical equipment and selling to all hospitals in India.
Okay.
So they attend these workshops where they pay some 10 lakhs and neither they are paying GST nor these people are paying GST. I mean both ways.
I'll see who's
They are registered
now.
as medical foundations, not one or two. So many are conducting in various states. And
I'll put it in this way, ma'am. This broadly this in connection with pharma industry itself. Who pays is more important. If an organization pays or sponsor the event to get a space, stall, all this, then naturally it is a sponsorship. Naturally it's a sponsorship thing. It is the respective company, respective LLP, respective firm is liable to pay under RC. It is not the organization on the other end. Okay. So if your client is a person who pay 5 lakhs to a particular foundation, and in that foundation, in that area, all the hospitals are being called where they demonstrate all this equipment, it is your client who is liable to pay under RCM. It is better to pay and claim credit. Okay, than tomorrow coming and saying I don't have an agreement. See, if we have agreement itself, this fellow will ask 4 questions. If you don't have agreement, he'll come up with some 40 questions before us. And the oral agreement validity has its own challenges associated. At least a mail confirmation, some sort of documentary requirement becomes important in all this. Else we have to go by the nomenclature at which it got accounted. That's all. Thank you all for effective and patient listening. Thank you.